Hello, good afternoon, everyone. It's a sunny Sunday afternoon. How's everyone doing? And are you out for lunch? Yes, today the topic I'm going to talk about is why DCA dollar cost averaging in the stocks market is not for everyone. Coming from someone who has actually invested in the stock market by dollar cost averaging in the one particular stock for nearly 10 years. So I will share with you why dollar cost averaging is not for everyone. And as you know, dollar cost averaging, the approach is very simple. That means you actually invest in a fixed dollar amount in one particular investment for a regular period. And by that, I mean it's best for you to have it automated. Why? Because most people actually lack of discipline. And dollar cost averaging itself, you actually ignore the price movement of the stock market, which means when the stock price goes up, you invest in lesser shares. And when the stock price goes down, you invest in more shares. So this requires you to be very disciplined in that sense, to be able to commit to a regular fixed amount of money regularly. Okay, let me sit down and share with you why most people actually lack of the discipline in dollar cost averaging. And another important aspect of it is to be emotionally attached to a particular stock, which I am also guilty of. I have been investing in a capital integrated commercial trust, previously known as Capital Mall Land Trust, for more than 10 years in doing dollar cost averaging. And by doing that, I have actually gained with a small fixed regular amount of money being invested regularly by using an automated investing platform. It actually allows me to accumulate more shares through the reinvestment of dividends during this 10 years period. And one important aspect I want to share is for dollar cost averaging, it is best to use an automated platform to actually shift yourself out emotionally from the rise or fall of the share price, which means when you actually use an automated platform to invest regularly in a fixed amount, then subsequently you do go and check on the share price of the stock that you actually invest in. And one important aspect of dollar cost averaging is I will highly recommend you to use an automated platform, because most people, in fact 80% or even 90% of the people, lack the discipline to invest regularly by their own means, which means they cannot take the action to invest regularly by themselves for a fixed amount period of time. So that's why the automated platform comes into play, which will assist you to invest regularly without you having to do the action repeatedly over a period of time. And of course, that also helps you to divert any form of with emotional attachment to the price. So let me give you an example. Let's say for this month, you actually start to invest in using an automated platform through dollar cost averaging strategy to invest this particular stock. and the share price is $2, and you actually invest in a fixed regular amount of $100 per month. So you will actually accumulate 50 shares based on $2 per share price. And the following month, the share price of the stock actually rose to $4. And then with your $100 fixed regular amount, you will accumulate lesser shares, of which is 25 shares. And your average price will also increase due to the increase of share price as well. And by the third month, the share price actually falls to $1 wise, and that's where you are able to invest 100 shares with your $100 fixed amount of regular investment amount. And by averaging out, your share price should be lower than the market share price. And that is what dollar cost averaging is about. However, this takes a lot of discipline and emotion as well. So through this example, you can see that the share price of this stock will actually rise and fall. So it's not about the rise of the share price where you actually accumulate at a higher average share price. And what if the share price actually continues to fall for a period amount of time? So that's where a lot of investors are actually becoming fearful and sell away their shares at a loss. So dollar cost averaging is a long-term strategy. And what I mean about long-term is to be able to invest in the market for a period of at least 3 years and above to be able to see results of the dollar cost average strategy. And most people by the first year using this strategy, so most people actually fall out of this strategy by their first year investing using dollar cost averaging. And that is why I would say that dollar cost averaging, like any other form of averaging, requires discipline. And most people are not disciplined enough to use this so-called boring strategy to invest for long term. And many people will talk about use dollar cost averaging lah, DCA, in the stock price, in this stock. And by long term wise, definitely will 保价. Yes, will 保价, but how long can you actually sustain? Or are you even disciplined enough to stick to this strategy? That's the gist of it. The approach, the concept of dollar cost averaging is simple, but to be able to execute it and to stick to this strategy and to be disciplined, that is the difficult part. That is why I actually highly recommend any investors out there who wish to use this strategy to use an automated trading platform to do it. Sometimes you might actually forgot to invest in this particular period, or when you see the share price itself actually falls or rise tremendously within days, that's where you are being fearful. And there's actually a lot of emotions and feelings coming to tell you that, oh, the share price actually falls so much. I should wait for the next month, fall more further, then I will start to accumulate more. Or the price actually has increased so much, I have to wait for the share price to fall down, then I will start to accumulate more. Then that defeats the purpose of using dollar cost averaging. And that defeats the purpose of using dollar cost averaging. And for dollar cost averaging wise, it ignores market timing. Be the share price going up or coming down, you will just invest and stick to this strategy. And that is the most difficult part for most investors out there. Because they lack the discipline and they are being emotionally affected by the share price of the stock. So what do you think about using dollar cost averaging strategy? Does it sound simple to you? And are you able to be disciplined and stick to this strategy for, let's say, a period of 3 years and above to see some results to that? And that's the question I would like to actually pose to investors out there. If you actually find this video sharing helpful, do like and subscribe to my channel. And adios.